Okay. A moment of silent meditation and pledge to the flag. Thank you. I
pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Okay, I want to call this meeting of the Monongalia County Commission to order. This special meeting, it's Monday the 24th at 11 o'clock. Let the record reflect that all three commissioners are present. First item on the agenda is comments from the public. Open up the comments from the public section. Do we have anybody that would like to address the commission? Okay, seeing none. I'll close items or comments from the public. Next item on the agenda is new business. The only item on our agenda. To consider for adoption a bond authorizing resolution in order of the County Commission of Monongalia County, which would authorize the issuance of its A, Special District Excise Tax Revenue Refunding and Improvement Bond Series 2021A, the University Town Center Economic Opportunity Development District, the Series 2021A bonds. B, Subordinate Special District Excise Tax Revenue and Improvement Bonds, Series 2021B, University Town Center Economic Opportunity Development District, the Series 2021B bonds. And C, Junior Subordinate Special District Excise Tax Revenue Refunding and Improvement Bonds, Series 2021C, taxable, University Town Center Economic Opportunity Development District, the Series 2021C bonds, and collectively with the Series 2021A bonds and the Series 2021B bonds, the Series 2021 bonds. For the purposes of currently redeeming in full and defeasing the County Commission's outstanding Series 2020A or 2020B excise tax bonds, paying costs of the design, acquisition, construction, and equipping of additional development expenditures in the University Town Center Economic Opportunity Development District, funding reserve funds for the Series 2021A bonds and the Series 2021B bonds, paying capitalized interest on the Series 2021A bonds and the Series 2021B bonds, if necessary, paying costs of issuance of the Series 2021 bonds. Approve the forms of certain documents to be executed by the County Commission in connection with the issuance of Series 2021 bonds, and authorize the execution and delivery of such documents by the appropriate officers of the County Commission and other matters related thereto.
Move for adoption.
Second.
Okay. Do we want to come on up, Ryan, and you want to explain or have our council explain what we're doing here? Tom?
I'm going to do it by myself.
That's okay.
Yeah.
And just for the record, who do we, come on up, Rob. For the record, and announce who you guys are, and then we'll announce who's on the screen with us.
Ryan Lynch with Westridge.
Okay.
Tom Eamon with Steptoe and Johnson, the county's bond counsel for the project.
Okay.
Rob Steptoe with Cruz and Associates, the county's municipal advisor.
Okay. And can you tell Colleen who we have on the line?
David Sakia, Fred Williams, Jeffrey Rink, Michael Lambert, Carrie Cecil was on.
I am on the line.
Oh, Carrie Cecil is on, and Corey Slider.
Okay, and I assume you, everybody on the screen can hear us?
I can.
That's good enough.
All right.
Yeah, I can. We're all good. We can hear. Thank you.
Okay,
Yes.
Thank you. Go ahead, Ryan, Tom.
So thank you all for calling a special meeting today, taking this up for consideration. Continuation of obviously several prior discussions that we've had in regard to this. Just by way of quick recap, this is picking up from the 2020 issuance, which was cut back significantly from what was originally proposed due to COVID and the effects that that had on the bond markets. The market for this type of an obligation has since returned and actually become pretty strong with potential purchasers out there. So this seemed like the time to come back and to try to complete the remainder of that funding. We've got the same team in place that we've used for the last couple of transactions with obviously us as bond counsel representing the county, Westridge as the developer with Mr. Lynch, Rob Steptoe with Cruz and Associates, and also Michael Lambert as municipal advisor to the county for the transaction, Key Bank as the underwriter for the bonds, and Frost Brown Todd as their counsel. Municap with David Sykia preparing the revenue projections for the excise tax. West Banco as the trust team. So basically, what we're doing here is the 2020 B bonds were placed with Westridge at the time that we closed last year. Those were junior subordinate bonds, basically third lien, and it allowed the developer to put costs into those bonds that they were making that could not be paid at that time due to available revenues from the more senior bonds. So that has occurred. There's also the 2020 A bonds were structured such that they can convert to senior lien bonds once certain revenue coverages were met. We're now to the point where with the performance of the district with businesses that are anticipated to locate and open within the required time frames to hit those coverage factors. And so those bonds as a part of this will move up to the senior lien bonds on parity with the 17As. As a part of this financing, we've got the repayment of those junior 2020B bonds. We've got new money that's going to be made available for additional future prospective costs. And we're doing that through 3 series of bonds, a 2021A series, which would be first lien bonds on even keel with the 17As and the 20As. Those bonds would be used in part to refund in full, refund the vast majority of the 2020B bonds, and also to provide approximately $4.3 million based on, not having yet priced the bonds, approximately $4.3 million in project fund monies. The 2021B bonds, which would be subordinate, second lien bonds, we're going to do this, or proposing to do this, with a tranche structure so that based upon the existing businesses in the district and the sizing of the bonds and the project fund that permits, we're going to go ahead and release those monies, make those available at closing for additional project costs, and then going to hold back at closing what we call a tranche, approximately $7.4 million. And then once certain benchmarks would be met, with lease for Kohl's being signed and for Texas Roadhouse within the next 12-month period, then those monies would qualify to be released again for additional qualified project costs in the district. The C bonds, very similar to what was done with the B bonds. So junior subordinate lien, third lien position. We'd move over the monies that were put into the B bonds to fund the 17A supplemental reserve fund. That was about $5.2 million. Those monies, again, because those can't be refunded on a tax exempt basis, so then those stay in that junior subordinate position, and then likely some interest that's accrued and not been paid on the B bonds. I think roughly about 1.2 million may also be put into those Cs. And then again, as the developer incurs future prospective costs after exhausting funds from the 21A and the 21B bonds, the 4.3 million and the 13 million. If there are additional costs to be incurred prior to the commission being able to meet the tests to issue additional bonds, those could be credited into those junior subordinate bonds. Still proceeding, everything within that master plan design concept that was set out in the development agreement for the, all expenditures being within that overall master plan that both parties have agreed to. Obviously funding reserve funds for these bonds in case shortfalls occur. Also be some capitalized interest on the A bonds to be able to carry those until some of these businesses open up and start creating the revenues that will be necessary to repay those bonds. We're going through a period right now where Key Bank has approached investors with what's called a information package, which is basically a very detailed summary of the transaction, approaching sophisticated institutional investors and bond funds, primarily the investors that are already holding bonds for the district, and gauging what their interest may be to participate in this. We'll hold a pricing period on Wednesday, then locking in who the purchasers will be and what the final terms will be, mostly interest rate on the two series of bonds, the A and the B. And then I actually have the paperwork with me for the county to execute and deliver a replacement 2020 A bond and a lien certificate, which would be necessary to move those 20A bonds up to that first lien position. And then we're targeting June 9th to close, and I'd come up with you all prior to that and sign documents for the closing. We have a limited offering memorandum that is a very detailed disclosure document that's providing the investors with all the information that they'd be interested in seeing and deciding whether to purchase these bonds or not. The bond, that's a part of your packet and approved by the bond order to approach those investors with that offering document. It includes the revenue projections from Unicap, which demonstrate the coverages on a prospective basis, which are necessary to meet the test to issue these bonds. So that's kind of the overview. The order itself would authorize the issuance of the 3 series of bonds by the commission. Get down here to the parameters. Got a lot of recitals here, but that's some good information for you guys. So not to exceed the 34 million for the A bonds at not to exceed 9% rate. Again, within that maturity of the term of the district in June 1 of 2043, July 13th is our actual termination date. Issuing the B bonds an amount not to exceed 18 million, those subordinate bonds at a not to exceed 9% rate, and with a maturity no later than that July 2043 date. And then the C junior subordinate bonds at not to exceed 55 million at not to exceed 9.75% rate. That's a taxable rate, so that's different from the others, which is tax exempt, and it has to be adjusted to take that into account, and also the fact that it's a basically a third tier in priority. The bond order approves the main transaction documents, which is the fourth supplemental indenture, the fifth supplemental trust indenture, the form of the bonds, the security for the bonds, which is solely the net excise tax revenues of the district. The county commission will have no repayment liability from any other source of funds. Authorizing execution and delivery of the bond purchase agreements, 3 of them, one for each series of bonds. That limited offering memorandum or disclosure document that I mentioned. A prepayment agreement that sets out how the 2020 B bonds would mechanically get repaid. Continuing disclosure agreement for the county commission. These bonds will have a continuing disclosure agreement similar to your outstanding bonds, so that MuniCap will assist as the continuing disclosure agent in quarterly and annually filing information, posting that on the EMMA site relating to collections of excise tax revenues. Appointing the various financing team members and giving authorization to enter into the necessary engagement arrangements with those different parties. And that's what's covered by the bond order. So that's what's in front of the commission for consideration. I would, if you want to hear from Mr. Lynch, the developer, Westridge, or Key Bank, or anyone else, I'm sure we've got everyone available here to answer any questions that you might have.
Certainly. Do you guys have any questions?
No, not at all.
Okay. Ryan, I'll go ahead and let you, if there's something you want to add, and then I'd like to hear from MuniCap regarding their revenue projections. Just a summary of how they got to the projections they have. So,
maybe, do you mind? We have them go first.
Sure. And who's speaking? David?
Yes.
Hello, everyone. This is David Sykia from Unicap. We, in evaluating the projections here, or the development here, the first thing we did was we looked at inferred sales from existing businesses, is particularly those that have been in operation for some time. We also looked at how those have been performing through the pandemic, plus the first few months of 2021. We looked at national sales as reported to the SEC for publicly traded companies operating within the district. And finally, we looked at third-party sales data for vendors operating similar to those or to be operated within the district. A couple of the large suspects for Menards, we looked at the performance to date. We also looked at sales for comps such as Home Depot and Lowe's and their national averages. We've actually used a figure that's lower than what we've seen thus far for outside for Menards. For Bass Pro, we looked at publicly available SEC data for Cabela's, which was subsequently acquired by Bass Pro. And again, we used that national average, or we based our forecast on those national averages. For the upcoming portion, for those portions not yet built, most of the new development, the expected tenants are national retailers that are publicly owned. We looked at SEC data for those companies in that case, for those particular vendors, and again, we looked at national averages. We did and their reported sales per square foot. Anecdotally, we know that some of these vendors are expecting this site to exceed their current portfolio, but we have assumed national averages here. We've for anything that is not publicly traded, we generally relied on comps. For all of the vendors, with the exception of hospitality, we essentially assumed that there would be no lingering effects from the pandemic on sales, no permanent depressions or permanent losses for and that there would essentially be a return to normalcy for the sales period ending March 31st, 2022. For hospitality, in light of the fact that this has been the hardest hit sector for hotels, we've backed off what we would normally project in 2020 for the sales year ending March 31st, 2022. We've backed off 40% there, and then for 2023 we've backed off 15%, assuming a return to normal operations in 2024. I will also note that for Bass Pro, we have assumed that 25% of the sales are ineligible for the excise tax due to those being related to certain vehicle sales and such that would not be subject to the tax. So we've relied as much as we've leaned as much as we could on the 46 vendors that are currently operating, and from there we looked at information as reported to the SEC, and as well as third-party sources for average sales per square foot.
Okay.
And does that clarify sufficiently?
Yes. Robert,
Yeah,
Cruz is our, for the public, Cruz is our consultant that actually double checks these numbers and provides an opinion to the commission. So.
Right, and Michael Lambert is also on, and I'll say that with David Sakia, Municap, and Michael, who, by the way, he has experience nationally with these types of development financings, and so he understands a lot of the numbers with sales per square feet nationally. And so Michael in particular was able to work with David and his team to come to the sales per square feet that are represented in the numbers. And so we're satisfied with where those numbers are.
Would you consider the revenue projections to be conservative?
I would say they are reasonable and conservative.
Okay, Ron, you have anything you want to add, or anybody else you want to?
No, I know you guys, this is a special meeting, so you don't want to be here forever. So really, I'll just try to kind of wrap it up in summary. Tom started with a summary, and then we very quickly get into the weeds. But I think, especially for the public's sake, kind of in the context of the development, is kind of what I wanted to speak to. So Tom hit, these bonds are not in addition to the 2020 bonds that the county actually authorized. These are generally the same development increment, amount of bonds, and structure to what we had worked, we being collectively from, I think, October of 19 until March of 2020. And then, the most unexpected event occurred. I was a few minutes before we started looking at the dates, and we were supposed to price on Thursday, March 12th, 2020, and that was the second. March 9th, March 12th, and March 16th were the 3 days when there was 2,000 point drops in the stock market, that I'm sure will get coined in history as pretty unique periods of time. And so, as everybody knows, that just evaporated the market for this type of bonds and really closed the door for almost a year to kind of return to normalcy in that market. So we did, but after that, in March of 2020, the county, the developer, and the team of a dozen legal and financial advisors worked pretty much around the clock to issue some bonds. There was about 27 million in bonds that were issued to just one investor, a large national fund, but one of the dozens that are looking at these type of bonds today. And because of COVID, a lot of that 27 million went to fund reserves and extra interest expense. That was just kind of a fact of the market at that time. So what did that delay in issuing the amount of bonds do? Hopefully at the end of looking back over a couple years, it was just a short-term delay. We did really have to concentrate on expenditures just to keep Menards moving, just to keep Bass Pro moving, and delay a lot of other expenditures in 2020. But ultimately, those stores obviously came through, and this will get us a major step back to where we thought we'd be, and so hopefully it's a short-lived effect. Overall, in aggregate, the district sales have returned to pre-COVID levels, so that obviously helps making this issuance. And with the recent big openings and very soon, very committed near-term openings, we should expect pretty significant increases. But why we're sitting here today really is because the bond market came back and is allowing this to happen. So from what I gather, that really started happening just a few months ago, certainly less than a quarter ago. And also from what I gather, which I'm not it's probably linked to seeing the light at the end of the tunnel with the vaccine and being able to at least envision a return to normalcy and all the risk of retailers having to shut down again decreasing. And so now that opportunity is in front of us, we, the developer, asked the county and the whole team to move as quickly as possible. It's not the reason it didn't get done before is very quite obvious, not anybody's fault, and no reflection of the development's how the bond market views the development, but it did happen, and so getting back to where we thought we'd be as quickly as possible is good for a dozen plus reasons. So we really appreciate that request was absolutely honored, and everybody gave and is giving 200%, not 150% effort to get this done as quickly as possible, and including calling the special meeting this morning so that we can kind of work this into a Memorial Day schedule where KeyBank says it's best to price as far away from that holiday weekend as possible and things like that. So that's probably the 50th example of a special accommodations to allow this to happen. And so between Menards, Bass Pro, and then the Home Goods, Ross, Burlington, it's about 350,000 square feet of retail. To move that much retail forward in any times is a lot, but to keep it relatively on schedule, despite the last 18 months or so, is a unbelievably challenging and noteworthy accomplishment if we keep going. So that's really, truthfully, cannot be more clear on that. Could not happen without a ton of committed parties outside of ourselves. Our lenders, our contractors, our vendors, this team on the public finance side, these gentlemen and the rest of the people on the team, it's not uncommon in the last couple of weeks to see emails at 11:30 at night and 2:30 in the morning. And so that's not common and expected, but extremely appreciated. And so that's all I kind of want to absolutely emphasize and underline.
If I can just add what you said, I think it's clear, and I think the public needs to realize this isn't new bonds. This is what we thought we were going to do, and I agree with you. I think this team has done so much for this county by waiting, and then once it opened up, you all went forward, and it really benefits the county and the residents. And I agree with you. This team has been spectacular and the best in the state, and it continues to show. And that's what I want the public to realize.
I agree.
I just want to make sure the public knows that we've been doing our due diligence. And Rob, I was going back to the question that the review you guys did, and you were talking about the revenue projections, and to get to cover the debt, we're talking about an increase for 2022 of about 38% in revenue projections. But you guys are comfortable with that in regards to that pulls in how we're doing now, plus all the additional stores?
Well,
the performance on Menards and eventually
right,
Bass
and
Pro.
that's where we have to rely on Unicap's assessment, their sourcing, their analysis, and the sizing of the overall issuances around that projected excise tax revenue.
Okay. But there's no cause for concern or anything?
Not according to Unicap's summary of revenue projections report.
Okay. And I look across the deposits into the excise tax fund, and honestly, during the whole COVID, the COVID period, I want to say from February to probably about March, it really wasn't too bad. I hate to say, I mean, I don't want to, but when I look at the numbers, it didn't seem too bad. We had one significant dip, but for the most part, now they are coming back, and the numbers, the last month was the highest I've seen in the last 2 years.
Right, and if you look at the sectors, the retail, the restaurant, dealerships, and hotels, hotels were the one that obviously, because of COVID restrictions, took the biggest hit.
Yeah.
But even hotel occupancies are rebounding pretty strongly.
50-60%.
Yeah, and they were down, way down, but now they're only down 7%, for
Right.
instance, instead of 60%. But the others are, as you say, Commissioner Sikora, have been fairly consistent, fairly stable throughout the last 12 to 18 months, however long it's been.
Yeah, I would expect that the last 18 months would have been a lot harder
Yeah.
on this district, but it's weathered fairly well. So going forward, that increases my confidence that it will continue to perform and perform well.
I also think with the amount of money that's being put out by the federal government to the individuals, there's more of a money flow that wasn't available during that time period. So they're going to have to spend the money. Let's do it here.
Okay. Do you have any other questions? Anything else that needs said? Anything, Renata? Okay, so we have a first and a second. All those in favor say aye.
Aye.
Okay, motion passes. Is there any other business?
Move to adjourn?
Okay, all those in favor say aye.
Aye.
We're adjourned.